Hi, everybody. Miss Allie here, and this is for Accounting 1. In our curriculum, it's right here, 4.01D. In your book, it is 4-3 in your textbook. And this is page 109. All right, so just to let you know that. So I'll put that in red so you can see it. And then in our curriculum, this part right here, red, so you can see that. Okay, so that's what we're doing today. I'm just showing how to correct entries because we're all human, and everyone who does accounting is human, and we can make mistakes. The thing is that you need to go back and need to be able to correct these properly. All right, so we're going to go through each one of these transactions. So this says that on August 1st, discovered that a payment of cash for advertising in July was journalized and posted as a debit to miscellaneous expense. I'm going to, right here, you know that I like to use the D equals C, DC Adler, and um, then talk you through using that as well so that it can help us out on how to distinguish what we need to do with these. All right, so DC Adler, and the Adler. All right, so you got to know what these stand for. And these D and C, of course, is debits and credits, but Adler is assets and drawing and expenses. And these increase on this debit side. Whenever these accounts have to increase, they always increase on the debit side. On this side is liabilities, or your loans, the owner's equity, and the revenue, or sales. And whenever these increase, they always increase on the credit side. Now, the thing about accounting is we don't use pluses and minuses like we do in math. If it increases, we put it on what's called the normal balance side. This is the normal balance side. This is the normal balance side for these guys, is debits. These guys is credits. If it isn't an addition, if it's not an increase, it's a decrease, then the decrease goes on the other side of the equation. So, for example, these types of accounts, liabilities, owner's equities, and revenue, when they decrease, I have to actually write them as a debit. Okay? I increase them only on the credit side. That's telling me that they're increasing. But if I see them on the debit side, it means they're decreasing. Likewise, with assets, drawing, and expenses, if I see them increasing, it's on the debit side. But if I see them decreasing, it's because they're in the credit side. Seeing an asset in the credit side tells me that that asset is decreasing. Seeing an expense in the credit side means it's decreasing. So just to show you, these that you're looking at right now are the normal balances. The opposite side would make it decrease. This side makes it, whatever you see it right now, makes it increase. The opposite side would make it decrease. So on all of these transactions, we're going to have to take it out of one account and put it into the correct account. All right, so these accounts, we're going to take it out of one and put it into the correct one. So we're going to be decreasing and increasing. So I'm going to make my notes here because these are essentially the word problems. And if you always hated word problems in math, sorry, but that's what we're doing. But these are real life situations. So to me, that makes a big, big difference. I'm not having to figure out if two trains leave the station, who's going to hit which one first or whatever. So August 1st says, discovered that a payment of cash for advertising was journalized and posted as miscellaneous instead of advertising. So what it's telling me is that they put it, whoever the bookkeeper was, they put it in miscellaneous expense, but it should be an advertising expense. My job with this $125, my job is to correct this error. I'm going to take it out of miscellaneous expense. I'm going to put it into advertising expense. Now, down here at my DC Adler, you see that expenses increase on the debit side. So my first account for this is advertising expense. I'm going to use August 1st because that's when we found it. And this document that's telling us to do this is memorandum number 17, M17. And the dollar amount is $125. So I'm putting it into advertising where it's supposed to be, but I have to take it out of miscellaneous because it doesn't belong in miscellaneous. You see over here, 25. Originally, that expense for miscellaneous was put in debit, but since we're doing credit, it offsets it and sets it to 0, and it puts it in the advertising. Hope that makes sense to you. You can go back and listen to it again. The next one says on August 8th, discovered that a transaction for repairs expense was journalized and posted in error as utilities. So what they did, they put it in utilities expense, but they should have put it in repairs expense, what it's saying. So I got to do the same kind of thing. I got to put it in repairs. And expenses going up is a debit. This is memo 20. And the dollar amount is $140. So now I have to take it out of utilities expense for $140. And this did the same thing by doing the utilities. Whoops, wait a minute. But in utilities as a credit, takes it out because expenses are increased on the debit side. They're decreased on the credit side. Okay, the next date here is August 16. And it tells me that a check received on an account was journalized and posted in error as a credit to accounts receivable Sally Joe. However, it should have been Susan Jack. Now what happened here is that they took a payment from Susan Jack because she paid on her account, but they made the error of putting it in Sally Joe's account and saying that Sally Joe actually paid it. Well, Susan Jack's not going to be happy about that, so they got to switch it back. So this time it said it was a credit, and before we've done debits. Okay, so this time we've got to take it out of Sally Joe's, to put the $450 back to Sally Joe. Sally Joe has to be the debit. You have to do the opposite of what was done. Opposite of the mistake. Opposite of the mistake. And so this is memo 35, and the dollar amount is $450. Now, accounts receivables are assets. It is, you own it, and it has value, and this is a promissory note from somebody that they're going to pay you back. Now, in this case, Susan Jack paid us back the $450. and that has to be a credit to offset the asset of the accounts receivable. The accounts receivable itself is an asset, but she's paying towards it. So it's decreasing, and that's why it has to be a credit. So we're showing that her account, what she owes us, is decreasing by $450, and that we put that $450 payment back into Sally Joe because she hasn't paid that yet. I hope that makes sense. Here on August 24th, discovered that a cash investment by Max Lawrence, owner, was journalized and posted as sales. So whoever did this put it in sales, but it should be in Max Lawrence Capital. Okay, so Max put money into his account, but his bookkeeper, whoever, said that it was sales and not capital. All right, so over here you see revenue. Revenue is the same as sales, and owner's equity is right above it. So we've got to take it out of sales. So to reduce it from sales of $500, sales has to be the debit. And this is memo number 80. And the dollar amount is $500. Now, it makes a big difference because sales, you got to pay taxes on sales and stuff like that. Well, that's not what this money is. This is the owner taking his own personal money and putting it into his business. You don't want to pay tax on that. And actually, it shows when he puts it in there, the equity is what's due back to the owner. So he wants to get this back at some point. So it does make a big deal that you put it in the correct account. And this has to go into Max Lawrence Capital. $100. Okay. I hope that makes sense. You have to let me know if it doesn't. The last one here says August 30th, they found another mistake. And a payment of cash for rent in October was journalized and posted as a debit to repairs expense. So they put it in repairs expense, and it should have been in rent expense. So we have to put this into rent expense. That's where expenses are increased, is on the debit side. And this is memo 85. And we have to take it out of repairs expense. And since repairs expense, all expenses have a debit as a normal balance, to take it out of rent, we had to make it a credit. Now that's the end of that assignment. I hope you understand this. All we had to do was figure out where they made the mistake, take it out of that account, and put it into the correct one. And that's what these two columns are for me. You find what works for you in organization so that you can see what's happening and that you can make the corrections the correct way. And then it goes into your general journal like this. All right, so if you have any questions, let me know. I'd love to hear from you. But that is it for today. Peace out. Love you. Bye.